Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. This is going to be your daily cryptocurrency market update. And we didn't do any videos over the weekend. We thought we'd take the weekend off. We've really kind of continuously drilled home our bias that, look, guys, we're in a recessionary period, and we think that crypto is ultimately coming lower. And essentially over the weekend, you know, it's very low volume. We try not to trade the weekends. The market just went sideways and then started to move going into Monday. Last night, we had the intrabank rates for sort of the FX market. And then, of course, we had the futures market. And Bitcoin and cryptos really just moved with that. It's very correlated. You have to do cross-market analysis as a crypto trader and investor now. And that's exactly what we're going to be doing on this video. I'm going to be telling you why I do see the scope for along. You know, I do essentially think that the cryptocurrency market could see a move up before we get that eventual spill to the downside. And I'm going to be showing you technically why I think that's possible. We're also going to be looking at the UK bond market, and you're going to be saying to me, all in crypto, what the hell has the UK bond market got to do with the cryptocurrency space? Well, one thing that we've been trying to teach everybody on this channel is that we, you know, when you look at markets, it's a what happens in other markets away from crypto affects our market. And we've shown you this time and time again, whether it's the interest rate pricing, whether it's the FX market, whether it's the stock market, you know, it all has an effect on the crypto space. And the UK bond market is significant because the UK bond market, the values of those bonds going down, which we've seen a huge spill here. This is an ETF that tracks the UK gilt market or the UK bond market. When we've seen this sort of crash in the bond market, this means that we've seen the UK, the Great British Pound, actually be weak, which has actually given the dollar strength. And we know the correlation between dollar and Bitcoin. You know, whenever the dollar is strong, typically Bitcoin is weak, and vice versa. You know, and I'll pull that up just really to drill this home, although I'm sure you are all very, very, very much aware of it at this point. So you can see dollar strength, bad for Bitcoin. And this isn't just applicable on the sort of wider time frames. It's very applicable. We won't use the 1 hour time frame. We'll go down to the daily. Very applicable on the daily. I mean, even the rest periods are very much in sync. So I do see the dollar, based on really what's happening with the UK markets and actually the dollar in terms of price action coming up to a very significant level of resistance, potentially having that rest that we spoke about. Potentially it could be this week. And that it potentially is going to be good for Bitcoin. There's also technical reasons that Bitcoin may actually see, you know, a move to the upside. We've got a bit of a bullish divergence on the weekly RSI. Things like the demand index looking like they're about to cross. And we also, you know that what's happening right now, and certainly why we're bringing up the UK bond market, we've got a new finance minister, something Hunt, I think he's called. And he's essentially scrapping everything that was done previously, getting rid of all the tax cuts. And the tax cuts and that mini budget essentially was supposed to be the reason, although I think it's to do with the sort of FX markets and the sort of central bank battles that are taking place. He's essentially scrapped the mini budget and is now, you know, going back and reversing it. And you know, markets are seeing some release from this. Certainly the UK bond market and, of course, the UK government market. So this is the yield. So when yields go up, the actual bond market goes down. And what we're seeing is we're seeing a pullback for the yields, and we're actually seeing a rise for the bond market. This is going to probably give the Great British Pound strength. If we pull up the USD pound sterling, you can see it had a huge spike and is now taking a rest. This is all occurring around about a period where the dollar is running into 2001's price action, which is definitely, and we have said this, going to act as resistance. We've seen it once, potentially twice. Do we get more of a prolonged pullback for the dollar here? Well, still very early days. There's still a lot of sort of instances or a lot of potential causes that may cause the dollar to continue going higher. We know that other markets like the European market, the UK market are on very, very shaky grounds. And really any kind of catalyst could come along and sort of tip this and move it back in the dollar's favor. The dollar is a wrecking ball at the moment, ladies and gentlemen. It's one thing you do not want to get away with, get in front of. That being said, we've got gold up today. We've got the UK markets up. Last night, the Asian markets opened up quite nicely. They've pulled back quite significantly. We've got the US futures market, which is up. And of course, Bitcoin is following along nicely. But this is all going to really depend on dollar strength and weakness. So will the Great British Pound continue to show strength? Will the euro gain against the dollar? And will, of course, the Australian dollar which I think was up last night from the intrabanks, actually continue to see a bit of strength, thus weakness for the dollar and benefiting the cryptocurrency market potentially, but it's still very early on in the day. So let's do a little bit of TA on Bitcoin. Well, what we're going to do is we're going to get rid of all these draws. Nice messy chart. We're going to get a clean one up. Let's get straight on to the weekly, and I'm going to explain why I do see a case for the longs. You are potentially going to cross here. Anybody that's used the demand index, certainly on your weekly and daily time frame, the demand index can actually act as a very good buy and sell signal. When you have a cross to the upside, you know, potentially you could put a buy on, and when you have a cross to the downside, it's a centered oscillator. You could potentially put a short on, and you can go and check the demand index out for yourself. Videos coming on all of these indexes and indicators very soon. We also had potentially a bit of a bullish divergence on the weekly RSI. So essentially what you've had here is you've had a lower price come in. So you've actually, in terms of a close, you've had this low, which actually closed. That's an awful arrow that I've just tried to draw there. You've had this close, which potentially, or which was essentially a higher close than this one. But what you've actually done is you've put on a higher high, or a higher low, I should say, sorry, in the demand index. This is a bullish divergence, just like right back here for Bitcoin. Let's get off the draw tool for now. You can see that this was a massive bearish divergence when you actually put in a higher high in price and actually a lower high on the RSI. You're doing the opposite here on a short term. This is potentially going to fuel that upside momentum, certainly if the dollar actually sees a bit of a pullback. One thing that I will say on the dollar, even though there is the long case, again, we are still in an economic nightmare. We're seeing erratic moves across the board. And this goes both ways, not just, you know, to the up or the down. You know, ultimately, it's very much kind of yo-yoing at the moment. So be very, very careful. I would always be cautious longing in a sort of macro downtrend. I think you're far safer being on the short side of things. However, if you are looking for a long, you know, you do potentially have the backdrop for that today. But we will see. Still very early days, but there's those two kind of signals on the weekly. You also have potentially this double bottom situation playing out. In my opinion, you know, and one thing that also maybe validates the fact that you are going to get some sort of a push up here. I mean, this looks like quite nice bottoming structure, or I shouldn't say bottoming structure, short term. I do not think the bottom's in for the cryptocurrency market. We say this day in, day out. This potentially does look like you are going to get some sort of short term relief here. Essentially, you've just been ranging over the weekend. If we put it down to the hourly, you'll see this even more clearly. And you have now, if you look at this as a range, and we may just start doing some specific Bitcoin TA videos. So you can put this range wherever you want, really. But if you look at this as a range, you can see that you've actually stuck your head above it. You've came back into it once, twice, and now you're actually holding it and looking to potentially use it as a spring to the upside, targeting these levels over here. So one thing that I want to point out is that, you know, I don't think this is the bottom, and I don't think this is going to be sustained, and you're going to sort of push back to these levels here. I think this is going to be more short-lived, and it's actually probably just a short flush out before we get in that eventually. You know, it's very obvious to me that you're going to see that further downside continuation, and I think you're essentially just setting up very similarly to what we've done the whole way down from sort of 69K. You're setting up this kind of area of support. You're failing it. Nobody really is that interested at shorting here. What you're essentially going to do, in my opinion, is see potentially one final spike up, like you've seen on every sort of, or as a precursor to every sort of down move that we've seen thus far. Where's my draw tool? So you can see in this area of consolidation, you get this kind of final flush out before you start the downtrend. Same thing happened here, ladies and gentlemen. And this is really just to annoy the hell out of traders. You know, because if you're trying to run any sort of tight stop and risk management, it's kind of hard to position for this unless you're shorting up here. If you short here, you've got to sort of eat that, and then it becomes kind of a, do you hold it, do you not? And then eventually it will slam down. So ultimately, this is what I'm looking at. This is why I'm saying be very careful. Even here, you get some sort of a push to the upside. You can see on this little ledge here, push to the upside. Here, you get this sort of spill to the downside. It's almost like a fakie, and then you get this push up, and then you get the spill. So is that potentially what we're looking at here? You do have the backdrop for it. Again, it's so crucial, just like we were looking at the bond market for the UK, to do cross-market analysis. Watch the dollar. So if the dollar starts to gain strength again and kind of finds its feet here and goes to push on higher, you know what's going to happen with the crypto space. It's going to be inversely correlated, and you're going to see that further downside. So make sure you watch markets. It's going to be a very, very interesting open to see what takes place. There's not really a lot of crypto news. This is definitely a bear market, because whenever we're in a bear market, all the news slows down and people really struggle to kind of find crypto news that is relevant. There is still an awful lot happening within the crypto space. It's just that, you know, there's not as much sort of happening and being televised as there is in a bull market. The building really continues. I think yesterday we reached a new all-time high for Polkadot's activity in terms of developers. I'm a huge fan of Polkadot, I'm a huge fan of Atom, I'm a huge fan of ADA, huge fan of lots of these cryptocurrencies that just continue to build and sort of further crypto adoption and really build out blockchain and the kind of infrastructure of it, you know, ready for mass adoption. I do think this is the kind of direction that the cryptocurrency market is going in. We're not even at $1 trillion in terms of market cap. There's huge potential here. And in actual fact, you know, I think this is going to get to the tens, if not potentially into the future, hundreds of trillions of dollars in terms of market cap when we have this sort of merge with the traditional financial system. Still a belief that I have. We're still very, very bullish on the crypto space. We just understand that in this kind of period where, and we continue to bang on about this kind of idea of liquidity, in a kind of period where liquidity becomes scarce as a result of interest rate hikes and high inflation, that's not a good look for markets and is actually going to be detrimental. I'm going to see liquidity flow out of markets into other areas like the debt market, like the energy market, so on and so forth, which means lower prices. That's kind of, you know, we're waiting for this 2008. I think we were trying to show you how money works there. You know, if you've got $1 trillion of money, you've got $1 trillion of debt back in it. But that debt is actually worth more because it has an interest rate. So it's an inherently inflationary system, the fiat system that we're currently in. But essentially, you know, I think we're here. If we compare it to 2008 or somewhere here. And we've still got this to come. Until they start, you know, print money again and sort of continue to inflate the monetary supply, which they're ultimately going to have to do because it's a inflationary system that we live in. Inherently, you know, when you borrow money into existence, you have that interest to pay back. Well, if you've only borrowed so much money into existence, you have to then print more money to make sure there's more or enough dollars to pay things back. This is why in 2018-19 we saw the sort of repo market clog up due to liquidity, because it's a inherently flawed system in many ways if you actually use the fiat systems over a long enough period of time as a store of value, because they have to, you know, they can't ever stop inflating the money supply because it just simply wouldn't work. So that's all we've got for you in this video. We do see the case for a long for Bitcoin. It's going to be interesting. You know, are you going to have, you're looking like you're sort of finding support here on the S&P as well. So the S&P is definitely a market to watch. Look for this area here. If you take this and actually come below it and stay below it, then it's likely the S&P is going to continue to roll. But we'll see what happens when the market opens at 2:30. For now, we think, you know, potentially you're going to get a sort of stab up for Bitcoin. Don't get too aggressively long on this is not advice that I'd give, but certainly something I'm personally going to be doing just simply because of the kind of environment that we're in. There could be any catalyst that sort of throws these long ideas out the window, but we will see. You guys have a fantastic day. That is your daily cryptocurrency market update. If you've enjoyed the content, like is always appreciated. So as a comment, and look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys. Enjoy your Mondays.